We have a special event today, a chat with STPK Chairman Mike Morgan and John Carrington, who is the CEO of STEM. Just stepping back for a second, this is a smart battery business. The stock has done incredibly well. It's nearly tripled from the $10 share offer price. I'd also like to point out that all the existing shareholders are rolling their equity, and you've got some very, very impressive names in there, including the Singapore Sovereign Wealth Fund, Temasek, along with General Electric. And it's also backed by a PIPE, which has allowed this deal to be, completely satisfy the cash condition. So the cash is all there that's necessary. And that PIPE is backed by a very impressive group, including BlackRock, Van Eck, Adage Capital Management, Electron Capital Partners, and Senator Investment Group. With that, I'm very happy to introduce Mike Morgan from STPK, who's going to give us an overview of the deal, and he's going to tell us what made STPK so interested in working with STEM. Mike?
Hey, thanks, John. Really appreciate it. And we've just got a few slides here to go through very quickly, and then we're really looking forward to getting to the Q&A portion. Some important disclaimers on slides 2 and 3 to pay attention to. And then on slide 4, let me start by just introducing myself briefly. So I've been in the energy industry for nearly 3 decades, and during that entire time, efficient energy storage has been sort of the holy grail to enable rapid adoption of renewables like solar and wind onto the grid, because renewable energy is intermittent and storage greatly enhances the value proposition if it can be added. Simply put, STEM is the coolest and most exciting clean energy storage solution that we've seen. The problem we're addressing here is really climate change. And what we need is a revolutionized grid with STEM at the heart of that to be a big part of the solution. Since 2019, 90% of all grid interconnection requests have been from renewables and storage, which is up dramatically in the last few years when it was dominated by natural gas. So software is absolutely critical to making storage more valuable, and that is exactly what STEM does. They have long-term software contracts, and we kind of say they make dumb batteries really smart and more valuable to the grid. If you go to the next slide, and then I'll turn it over to John Carrington, we really love the company for 4 main reasons. One, it's a big market. They've got a large addressable market. They're benefiting from strong macro tailwinds. Second, STEM is a clear technology leader. They have significant global deployments and millions of runtime hours on the software. Third, this transaction is really loading up STEM's balance sheet. They're going to have over $500 million of cash and no debt to go attack this market. And finally, highly visible growth. So we believe this is differentiated. Nearly 90% of STEM's revenue ramp for this year was underwritten at the time we announced the deal back in December. It's a big ramp, 4.5x growth, but that's all supported by signed customer contracts that John and the team are executing on. So we're really excited about partnering with STEM, the first publicly traded pure play smart storage company. I'll let John take it from there.
Great, thanks, Mike. And by way of quick introduction, I spent most of my career, 25-year career now, I guess, at GE, about 16 years leading various product sales and marketing functions, and was assigned to lead our commercial operations in Asia. We built out that organization over 1,000 team members, and then subsequently was one of 5 executives selected by then CEO Jeff Immelt to lead the sale of the GE Plastics division. That resulted in a $12 billion transaction, at which time I then joined First Solar as the EVP, Executive Vice President, really driving revenue growth, policy, global geographic expansion. And we grew that company from 150 million to over 2 billion. And then was recruited to Mia Soleil as CEO by John Doerr at Kleiner Perkins. And we ended up selling that company after about 9 months. And that was really the edict from the shareholders and from John and the Kleiner team when I joined. So it was a good, successful outcome on that deal. And then I was introduced by one of the board members, actually, of Mia Soleil to the largest shareholder at STEM, and I joined as CEO in December of 13. And what really caught my eye was, first of all, the software was very compelling, and second of all, having been in solar, it was clear in solar you had kind of a single cash flow over a 20-25 year period, whereas Smart storage, particularly with the right software, enabled you to actually draw on upwards of 13 different value chains. That's very unusual and not something that you have in the solar or wind market. So I found that to be very compelling and was a big part of why I joined the company. So we provide our customers a clean energy smart storage solution, and that includes both the software and the hardware, grid integration, and battery optimization capabilities. All of this is controlled by our proprietary AI software platform that we call Athena. Our customers are commercial industrial buildings, renewable developers, that could be, solar or wind, and asset owners. We do not manufacture any battery hardware systems. It's completely hardware agnostic, and we procure this equipment from the likes of LG, Tesla, and Samsung, so only global tier 1 partners. The value is really enabled by Athena. It's our patented technology platform that optimizes battery hardware. And as Mike mentioned, we like to think of it as the super intelligence, effectively, of batteries. These are lithium-ion batteries, or big dumb batteries that without a very sophisticated Athena platform are pretty much useless, other than a couple of very minimal use cases. So what we do is we attach our software to all of our customers. It's 100% attach rate for our software services. We have some model that ranges from 10 to 20 years. And that provides us with significant and predictable contracted revenue. And there's the final piece to this that you see on the slide around this market participation. And that's when we aggregate customer installations and monetize that capacity in the energy market. And what's compelling is you can see very strong gross margins across each of these values as we go through the process. And the software revenue, the recurring piece of that, continues to grow in the out years. And you can see this movement to much more of a software led company. If we go to the next slide, one of the big trends that we see driving the global storage market is around this focus on decarbonization. And it begins with a variety of stakeholders rather. The primary three being corporates, utilities, and regulators. So first, on the corporate side, that's the lower right piece of the page here. These are commercial industrial companies that are committed to achieving sustainable targets, deploying more solar and wind, and lowering energy spend while improving the ESG narrative for shareholders and employees. This group have hired very sophisticated energy managers, and they come to us with requests like, how can we become a better grid citizen? They want that market participation I mentioned on the previous slide. How can we obviously save more money on our energy bill and not impact our operations? That's one of the most important things. If you think about some of the DR technology, demand response technology that's been out there, it requires customers to change their behavior. We are not doing any of that. They can continue to operate their business as they want to, and they can save money without even knowing what's going on behind the scenes and participate in these markets, which, as I said, gives this nice narrative from an ESG standpoint. Second, from a utility standpoint, many are committed to greenhouse gas emission reductions, and that will require both more solar and wind to meet those initiatives, but they're going to have to add more smart storage to manage the integration and intermittency of those technologies. Finally, on the regulatory front, the regulatory environment is very global in nature, and they're committed to increase the adoption of renewables, but they need to ensure grid resiliency. And the primary renewable adoption has been around wind and solar, both of which are intermittent resources. Smart energy storage is the enabling technology to expand renewables and ensure grid stability. Here in the US, there's bipartisan support for the acceleration and adoption of energy storage. And I expect we'll see a standalone investment tax credit for storage later this year. It's been announced in this last package, and we expect it to open up a variety of new markets in the US. So if you go to the next slide for me, it really is a good example of all this coming together. The increase in renewables, particularly solar and wind, have resulted in a cost that is now below traditional generation. Combining that with the dramatic cost reduction you see here in battery hardware, it results in a market that's growing at over 25 times over the next 10 years, leading to a $1.2 trillion market opportunity. We're also seeing the attach rate for storage at 5 times solar and wind here in the US and nearly 4 times globally. The next page is a little overview from a market perspective. STEM is one of the market leaders worldwide. Our deployment, thank you. Our deployments, are very significant and growing, as is our pipeline. The 12-month pipeline, one of our key metrics that we'll be reporting quarterly, is $1.6 billion. We have over 950 systems operating or constructed across the US, Canada, Japan, and we'll be looking at a variety of other geographies throughout the world with the help from our partners. Together, this represents approximately 1 gigawatt hour of capacity, which is roughly the equivalent of 12 gas peaker plants with 0 carbon emissions. We have leading market share in California, which to date has been the largest US storage market. Our share, as you can see on this page, is 75% and larger than our next 4 competitors combined. And then finally, as Mike alluded to at the beginning, we have $200 million of contracted backlog as of January 17th of this year, and that will result in a revenue growth of 4x versus 2020. Finally, I just want to have a couple comments on the transaction itself on the next page. So now, not only are we this category defining leader in the market, we'll now have an industry-leading balance sheet to accelerate our growth. We'll have $525 million of cash and 0 debt, enabling us to execute on much larger projects and expand our addressable market. Second, we intend to invest in our Athena software development team, including more software developers and data scientists, and opportunistically evaluate technology acquisitions that would either accelerate our software roadmap or help us open new markets. Third, the balance sheet will really lower our supply chain costs. We estimate this to represent more than $100 million over the next 24 months. And that's because our previous balance sheet just did not enable very strong terms to the company. In fact, we were paying 100% of our hardware cost before the hardware ever got to our customers. And as Mike mentioned, that can be 6, 9, or even 12 months. So that's all changing in the new balance sheet. And then finally, the geographic expansion and joint venture opportunities. We've successfully taken Athena to Canada, Japan, and obviously throughout the US. The strengthened balance sheet will really help us expand our business globally with the goal of Athena's adoption in all major geographies where customers and grids can benefit from smart storage. Our current investors have rolled their equity and include leading companies in Europe like Iberdrola, RWE, and Total, in South America, the likes of Copec, and in Asia, Mitsui and Temasek. All of these investors will be critical as we look to expand our new geographies and form joint ventures. And in fact, they've been very aggressive about us trying to work with them in the past. We just didn't have the balance sheet to do that. So with that quick overview, I'll now turn it back to you, John.
Can we talk, you touched on AI, but can you just explain a little bit more about how these batteries work and what's different from what else is out there at the moment?
Sure. Yeah. So our artificial, intelligence or AI software, which I mentioned is called Athena, is really built to optimize energy storage assets for different value streams. And each market has different value streams. The good news is we see 13 that could be identified with energy storage. So you've got this massive land and expand opportunity that I alluded to earlier that's just not out there with the solar or wind technology. And what Athena does is it's analyzing these large data sets and making real-time decisions that automatically respond to changing conditions in the energy market. It's not immaterial. We've been at this for a long time, and our data set is very important. So to kind of give you a little bit more color around that, Athena is ingesting over 700,000 data points per second from customer-sited energy storage systems. It acquires very specific and localized information. As I mentioned, it changes in different markets, but typically we're looking at weather, energy prices, grid dynamics, and obviously the customer usage pattern, and then their energy usage. And then what we do is we pair all of that with real-time data and our machine learning algorithm, which predicts future conditions, and that runs over 24 million scenarios to optimize battery value for our customers, the grid, whether it's the grid, the customer, or the utility. So it's a pretty intense amount of AI that's going on. It is true AI. It does get better with more use cases, and we believe it creates a significant competitive moat with all that ingested data. We have over 20 million runtime hours, John. That's the equivalent of 2,000 years of experience, actually, which is remarkable. We've had many battery suppliers come to us and try to want to acquire our data set because it is super compelling and very insightful on a variety of different segments. So, bottom line is battery storage needs smart software to make it work and optimize all these use cases. And by far, we believe Athena is the best in class around that objective.
Tell us, do physical differences in batteries make a difference? Or, if not, can't you just white label this and attach this to any hardware? And I believe that you do use a variety of different batteries, right?
Yeah, we definitely can put it on any type of hardware systems and have put on multiple, manufacturers, OEMs that I highlighted earlier. I think the other thing to note is we can also put it on battery solutions outside of just lithium ion. So we could do long duration type technologies, flow, whatever other batteries. We could put Athena on top of that as well. And we have a very good use case that's in the PIPE presentation on our investor website that talks about there was a large portfolio of systems that were underperforming from a software standpoint. It was put out to bid. Upwards of 10 bidders came in. We won that. It's in Southern California. We put our software on top of 85 sites within about 60 days. And the performance has vastly improved in those locations that we have. So we can not only put it on a variety of type technologies, we can also displace software that may be already installed.
Here's a good question related to current events. Someone said, I live in Texas and I never knew about our separate grid structure. Could STEM help prevent some of the problems that happened when that deep freeze came in?
Yeah, certainly we could. ERCOT's an interesting market. It's a unique market. It's one that we are spending more time in. In fact, our business development team's headquartered in Austin. So it would be a part of the solution. I can tell you that if there was more storage down there, it would have helped, but it's going to be it's a complex solution that's going to require a lot of technologies. We intend to be a big part of that, but the short answer is certainly storage will provide a solution to that situation going forward.
It seems that regulations around the world can be very disparate depending on which state or country you're in. How does STEM deal with that? Is your offering suitable to work just about anywhere?
Yeah, it's a great question. And it's something that, fortunately with the partners that have rolled that we mentioned earlier, they have a lot of legislative focus and influence in a variety of markets. So we'll now have the ability, the balance sheet to go expand into those markets. But, if you think about most geographies, a lot of countries have a national or a federal policy around energy. We don't here in America. I would say at a US level, though, there have been some interesting federal initiatives that have taken place. And certainly the new administration is very focused on renewables. They proposed a $100 billion investment to transform our electricity grid. That puts us on a path to achieving 100% carbon-free electricity. The plan will also include extending energy tax credits. We've seen some of that already for other renewables, but for the first time, the plan also proposes tax credits for clean energy storage. And that will help expand the US market by storage by at least 15% by 2024 is what our, Wood Mackenzie is at least put out in the market as their estimates. So we feel very good about what's going on in the US. Internationally, quite frankly, it's a little bit ahead of where the US is now. In the US, though, because we don't have a federal energy policy, every state kind of becomes its own country. So you see momentum around California, certainly. In Massachusetts, there's a SMART program that adds incentives if developers pair storage with solar. So every project in solar today is adding storage. That's been a nice market for us. Will continue to be so. In New York, there's a new mechanism that compensates distributed energy resources like storage. We're seeing similar actions in Virginia. So a lot of different areas in the country are starting to understand what smart energy storage can do, really to help add more renewables and decarbonize the grid, as I mentioned before. So we're very bullish on the Americas, what's going on in America. And as I said, I think the international piece has a lot of tailwind. You think about the excuse me, the Green Act in Europe. I mean, that thing is massive. The intent is to be carbon neutral by 2050, and it's like, you know, hundreds of billions of dollars committed around that. So we're excited about all of it. I think the best part is we now have the wherewithal to go chase some of these markets with this balance sheet.
When can I have one of these in my house? I've been holding back on putting solar panels on my roof because I'm worried about not being able to save the energy. I know that that's something that you guys have cooking, but can you tell us a little more details?
Yeah, today we're not in residential. We do think it's a compelling opportunity. It's a big growth market. We have had a lot of residential storage providers talk to us about utilizing Athena software. So as we formulate our strategy, we'll roll that out to everyone, but we're excited about that market. We think it is compelling, and we're certainly taking a look at what the art of the possible could be. In the interim, Mike, I'd say call Sonova though.
Yeah. So I'm on the board of Sonova, which is a resi solar company that also offers storage. But I think John's right. STEM's opportunity is, as you aggregate, you know, individual residential consumers into these loads that can, you know, make a difference. They don't have to be that big. Then something like STEM solution becomes potentially very important. If you think about microgrids and community solar, you know, STEM's got a big opportunity there down the road.
Yeah, I think it's a good point. We have, you know, it's interesting because what we've done to this point with C&I customers is aggregated those, create what we call virtual power plants. And that's going to become a bigger and bigger part of a utility offering to their customers. So that aggregation component is not trivial, and we can provide that software solution to the residential market for sure.
Let's talk about the cash on your balance sheet. That's a lot of cash, $500 million pro forma on the balance sheet. Where might investors see this directed as far as investments? Could it help you go overseas? What kind of things do you have? What kind of plans do you have for that?
Yeah, I really think it'll give us the opportunity to expand from a geographic standpoint. And you know, the other thing is, having a large balance sheet in the energy space has never served anyone badly. We work with utilities, or we work with large corporates. They want to make sure we'll be around a long time. We have, in fact, seen instances where large renewable owners, asset owners, many private equity companies, where they say, we want to use your solution. We want to put Athena and your storage solution on our solar facilities. We'll spend time on our balance sheet pre this announcement, and we'll actually get cut back. We've multiple occasions where we had 100% win turn into 50, 40, or 30% because of that issue. So that's tabled. We're seeing more and more large opportunities coming our way since the announcement. So we feel like that bigger balance sheet will definitely open up the ability to participate in larger projects, and certainly the geographic expansion is big. And as I mentioned, I don't think you could have better partners than who we have, really. It's the biggest names. They're very global. While Mitsui might be in Japan, and by the way, our first projects we did in Japan were with Mitsui. We actually took Tesla to Japan. And but they're also very big globally. So it's not just a Japan play, much like Temasek isn't just an Asia play. So we're excited about all of our partners, and we believe that will also be an area that you'll see us have some more upside in than we had before.
Question about your growth forecast. Something that jumped out at me and I thought was very, very interesting about transaction when I spoke to you guys. There's a lot behind those numbers. It's not like you're doing top-down analysis and saying that's what we're hoping for. Can you just, if you would, just talk a little bit more about how you got to those projections and why investors can have confidence in them?
Yeah, well, I think first and foremost, it's a little bit about what Mike said, which is, you know, through the third quarter of last year, our bookings represented about 90% of our 2021 revenue goal. So we've updated that. We've affirmed our revenue goal for 2021. So I think that should give a lot of confidence for shareholders. We also have a significant and growing pipeline. That gives us visibility into 2022, and that's starting to evolve more and more each day. And so we feel good about, you know, as we look at those numbers going forward. But from the perspective of how we built the model, you know, I think it was a very collaborative effort by Star Peak, and they were very thoughtful across a variety of diligence, right? They hired outside consultants around software, being McKinsey, Crosslake. They actually utilized, Wood Mac in a study, Wood McKinsey, and it wasn't your off-the-shelf internet version. This was a specific bespoke product for us. It looked at behind the meter, in front of the meter, which, again, it's more developer versus maybe your corporates, what that growth rate looks like, what's the international growth rate look like. And then we really took those numbers and took a pretty conservative share estimate, particularly when you look at our share here in California. And then we built the model out from there. So I think it was very thoughtful, very collaborative. And I would say all that data is in the back of the pipe deck, by the way, which again is on the investor website for anyone to review. But and we did take out residential, and we also took out some very large projects. We just didn't think we could win the likes of what a next era or a large utility might be doing. Mike, I don't know if you want to add anything there. You were in the middle of it, obviously, as well.
Yeah, no, look, it was a big effort, and John's right. I mean, if you go to the back of the pipe deck that was, published publicly, there's some great data back there, primarily from the Wood Mackenzie work that was done. The nice thing about this business is you have contracts in hand to build up. It's a very bottoms up near-term forecast, and then longer term, sure, you get into market share, and that's what Wood Mackenzie and McKinsey and Company helped us do. But that really was the process that John described.
And I'd also add, John, that you don't see many $1.2 trillion market opportunities. And, again, that's a third party view. And it's just really exciting to just see how much growth is in this space. And it's fairly early innings, but, being the market leader where we are with this balance sheet, we couldn't be better positioned.
Someone's asking an industry question about battery supply. With everyone gobbling up all these batteries because of this shift that's happening, or is STEM in good shape as far as its supply of batteries?
Yeah, we run a pretty thoughtful process through our supply chain group, whereby we put an RFP out, request for pricing, every year. We take that out to anywhere from 10 to 15 different suppliers. It's a comprehensive Excel where they answer over 35 questions, gives us a lot of insight around cost reduction roadmap, their capacity, where they've installed product, the use cases, and then we'll select 2 or 3 of those suppliers. So we have very long enduring relationships with our suppliers. As I mentioned earlier, it's the likes of Tesla, LG, and others. There is a technology in lithium ion that's LFP. It gives you a little bit longer use case. And so we're utilizing that product with our solar plus storage applications, whereas the C&I might just be one of those suppliers I mentioned. Tesla today does not have LFP as an example. They are talking about that, publicly have mentioned that. So as that occurs, we'll consider them as part of that solution. But we have very good relationships. We're a very big customer to these suppliers. So I think we get treated well. Where I've seen some problems or heard about it anyway was more the residential side. But to this point, we feel very confident about our supply to meet our objectives in 2021.
There are a lot of questions in here about Tesla asking, do you see them as a friend, an enemy, a frenemy? We know that they supply batteries to you, but is there any chance that they would offer a competing software offering? Can you just explain the relationship a little bit? I think a lot of people are interested in it.
Sure. No, we've got a very good relationship, as I mentioned. We're a large procurer of their batteries, know the management executive team well. We see them doing much larger projects than what we're participating in when you look at the likes of the Australia project that they announced and others. So we don't see them overlapping with what we're doing. And if you think about a Tesla, it's analogous to a Foxconn or a Flextronics, right? They want to drive more throughput. Foxconn and Flextronics aren't going to build a computer to compete with Apple. They like that model. They're going to stick with it. And that's the sense I get. And by the way, if they ever did decide to compete with us, we would move over to other suppliers and put more share there. So I think that's true with anyone in the industry that's procuring product from them and others. I mean, they continue to tell us they want to deliver the best hardware solution, and we'll continue to put Athena on top of that.
Someone's asked, is there a lockup for early investors or founders after merger completion?
There is. So the STEM shareholders, the existing shareholders of STEM, are locked up generally for 6 months. The sponsor is generally locked up, for a year. It can be 6 months if the price is done great. But basically, those groups are locked up for a minimum of 6 months. But people who bought in the open market, there's no lockup of any kind. I mean, if you bought those shares, you can buy and sell the open market shares without any restriction.
And I just add the executive team is 6 months as well, John.
Oh, yeah. Sorry.
How do you look at competitors? I mean, of course, you guys have a head start. You've been around since, I believe, 2009. So, there's some lead there and a moat. But are there big rivals that you're keeping an eye on? And how do you look at the competitive landscape?
Well, look, it's a huge market. And we got this question a lot when I was at First Solar. How are you going to continue to lead it? $1.2 trillion market's massive. We are the market leader. We feel like we'll continue to be one of those three. There'll be some big players, no doubt, and we expect to be one of them. You know, I think that the geographic expansion that we can go do will really accelerate our lead as well. But, you know, it's a highly differentiated software package when you have the runtime hours that we have. You can't make that time up, right? You've got to be out in the market, understanding how it works. We also have the, we believe the largest offering, having this Rocky Mountain Institute wheel, which is in the PIPE presentation, is kind of sort of the foundation or roadmap for what energy storage can do. We have 11 of those 13 use cases built on Athena platform already. What I think is really interesting is that first mover advantage matters, because as more use cases become available, let's take a Home Depot in, you know, Texas. As more of those use cases become available, we're already at the customer. So we'll just sell more software. We can remotely add that to them, and they're going to save more money. And that is a very, very compelling, as I mentioned, this land and expand component of it. So first mover matters. We have not had a customer say, get this product out of here. We are, you know, we go do master service agreements with our customers, typically at the enterprise level. We have a very strong go-to-market strategy where we actually have channel distributors and then these large developers that are partners for us. And we saw, you know, a significant amount of our 2020 revenue. 90% of our bookings, in fact, came through that channel. I should say bookings, not revenue. And so that the strategy is working. We also built what's called STEM University, where we put 650 sales executives all out there being trained on how to sell our solution, target customers, and contract on our behalf. So again, creating another competitive mode. So we're really excited about our go-to-market. It's working. One last thing around that, John, I would add is we've had companies, Fortune 500 companies that we've worked with on the solution. They'll put it out to bid amongst these channel partners. And they've had many cases where 9 or 10 of 10 responses will come back with the STEM solution. So we believe it's working. And, you know, these master service agreements at Fortune 500s are very important. And by the way, large asset owners of solar facilities want one platform. They don't want to have 15 different software solutions. So we provide a very interesting, compelling turnkey solution for that group as well.